Assalamualaikum and hi everyone. Our topic for today is basis period, that is chapter 4 in our syllabus. Before we proceed further, let me introduce you with a few terms. The first two here is on official assessment and self-assessment, which I expect you already understand from my previous lecture. And then previous year and current year basis also, I hope that you also understand. So I will not explain to you again. Today I would like to stress on these three terms, three categories. Okay, the first one is year of assessment. We will use many times in this chapter. So what is year of assessment? It is a period where income is assessed. Okay, when we say year assessment 2020, meaning that we want to assess income in the year 2020. So to assess the income in that YA or year of assessment, we need to have a basis period, which means that the year of assessment cover the income from which period. So the period is called basis period. Okay, the time frame for income to be taxed. So accounting period, on the other hand, is for accounting purposes. Okay, period for financial accounts are prepared. But sometimes accounting period is also accepted as basis period in taxation. Next is calendar year and failure year. Okay, calendar year is the normal year, 12 months starting from January until December. That is calendar year. And then failure year. We will also use the term failure year when we learn basis period, because failure year means when the year of assessment or the basis period contain less than 12 months or more than 12 months. That is referred to as failure year. Okay, this is the coverage that I want to talk to you all on this chapter. Let's start with basis period generally. Okay, we have two categories here. The first one is person other than a company, co-op and trust body. So for this category, the basis period should be according to calendar year. Okay, basis period for a year of assessment should be calendar year, which means that the basis period for this type of person or taxpayer should start from 1st January until 31st December every year. Meaning that if an individual having a business like sole proprietorship, they will be assessed for tax purpose from income generated from January until December each year. Okay. However, actually, if you are doing a business on your own, meaning that personal business, individual business as sole proprietor, who will fill Form B, taxpayer, you can actually close any date for accounting purpose. You can close every month, every 6 months, or whatever month that you want to close, because probably you are eager to know your profit. But for the tax purpose, we will assess the income according to calendar year, which means that if you prepare your accounting period different from 31st December, therefore you need to modify or recalculate the income from your accounting period to suit the basis period in taxation in order to pay tax. Okay. Next is company, LLP, trust body and cooperative society. For this category, the basis period is equal to accounting period, which means that whatever accounting period that the company prepare, we can accept those accounting period as basis period, or the financial year end in that particular year of assessment, we can accept as basis period. Okay, so company may close their accounts anytime during the year, not necessarily the 31st December. Okay, first let's see how basis period is determined under the commencement of operation or business. Okay, for the commencement of business that I discussed with you all here is for the category 2 on the company. Okay, not for the individual business. Alright, for if a company start its business, when the company should close their accounts? Okay, actually it's up to them. It may close on the same year, okay, which I refer to situation 1, or they can close in next year, either here or here or here. anywhere during next year. Okay, or so this one I referred to situation 2, or they probably have some problem that they cannot manage to close in the next year, but they can only close the account in the third year, anywhere somewhere in the third year. So these are the three situations. Okay, situation 1, situation 2, and situation 3. So for the determination of basis period, under situation 1, the basis period would be the accounting period. Under situation 2, so also similar. Under situation 3, also similar. The first accounting period is accepted as the basis period, which means that for situation 1, the basis period consists of less than 12 months, which we refer as failure year actually. And for situation 2, it can be failure year or it can be full 12 months, but we accept the accounting period as basis period. And situation 3 also we accept as basis period, which means that, year 1 is commencement of the business. Okay, so year 1, year 2, year 3. Under the situation 1, the year 1, we do not have basis period. Under situation 2, I made a mistake here. Under situation 1, we have basis period. But under situation, we have basis period for year 1, year 2 also, of course we should have for 12 months, and year 3 also we will have basis period. Under situation 2, however, we do not have basis period for year 1 because we do not close the account. But we have here and we have here. And then under situation 3, since we close in the third year, we do not have basis period for year 1, year 2, but we directly put the basis period under year 3. Okay. Let's say this is the YA. Okay. Year 1, year 2, year 3 is the YA. Okay. So under situation 1, we start with YA1, situation 2, YA2, and situation 3, YA3. The period in this basis period covered from year 1, only that it will be assessed in year 3, the income. So in this table, I made summary for you all to refer for situation 1, 2, and 3. But actually, after a few amendments in the public ruling, the determination of basis period become easier and easier. So for this time, all the accounting period for commencement we can accept as basis period. Only that you need to determine which one is the first year of assessment. Okay, here is important under commencement. Okay. Next, let's see how we need to determine the basis period whenever the company would like to change the accounting date. Let's say normally they close on 31st December, now they want to change to other date. It can be like that. So what happened? When company want to change the accounting date, probable situation I divided into 3 also, same as the commencement, where the new accounts close in the same year, or the new account close somewhere next year, like here or here or here, or probably end of the year, or the account may be closed in the third year, like this. So I refer to situation 1, situation 2, but situation 2 I divide into 2 situations, okay? Situation 2, 1 Roman and 2, 2 Roman. and also situation 3 where it closed in the third year. Okay. So you need to understand this is a little bit difficult as compared to commencement, but it's still easier than previously. Alright, for situation 1 where it closed in the same year, okay, same year as previous accounting date, so we cannot have two basis period in 1 year. Therefore, this short period, we will add to next accounting period. Okay. What we do is AP new, the short period, plus the accounting period next year to become the basis period in the next year, which means that year 2. Okay. The new period will be added to next accounting period to become basis period for year 2. Under situation 2, where the change of accounting date is closed in the year 2 or next year, somewhere in next year, either less than 12 months here or more than 12 months, it still can be accepted as basis period. Only that under this category, we will have failure year because the basis period is probably less than 12 months or more than 12 months. Under category or situation 3, where accounting period is closed in year 3, this make in year 2 there is no accounting period, right? But in taxation, we need to pay tax every year. So how are you going to pay tax in year 2 in this case? So what you need to do to find the basis period for year 2, you just take the new accounting period, which start from year 1 here, okay, until here. You just calculate how many months from start of the change until close of the change. Okay, how many months? You divide into 2. So it will close somewhere in the middle here, half. And half will be tax in third year. Okay, so it will make 2 basis periods for 2 YAs, which means that for YA2 and YA3. Okay, you can see now the accounting period has been divided into 2 basis period. One in year 2 and the other one is in the third year. So in this case, we'll settle the problem for that company to pay tax in year 2 and year 3. Okay, I have made a summary for you all in this table, same as the commencement. You can see when close in the same year, close in next year, and close in the third year. Example, you may see in the textbook. Okay, you must remember these 2 conditions. Okay, generally, accounting period prepared by the taxpayer will be accepted as basis period by the Director General, provided that these 2 conditions. Number 1 is no missing YA, meaning that every year we need to have a year of assessment. Okay, year 1, year 2, year 3, no missing YA, meaning that every year we need to have a basis period. And number 2, condition number 2 is that there is no 2 or more accounts closed in the same year. Okay, so in year 1, you cannot have 2 AP. If you have 2 AP accounting period, means that probably one closed on 31st March, and then you close again second time on 31st December. Cannot be like that. Okay, this one cannot. This one we will bring to here. Okay. So please remember these 2. So for missing YA is like when you close the account in the third year. Okay, you close here. Here not close, here close. So which means that here no BP. So when this happen, you take this period, you divide into 2 to form the basis period in the year 2. so that company can pay tax every year. There is no missing YA. Okay, remember these two condition, then it's easy for you to determine the basis period under whatever situation. Next is how to determine the income for basis period. Okay, since accounting period probably similar to the basis period or different from basis period, therefore we need to adjust the accounting profit to adjust the income in taxation and then to divide accordingly to the basis period in that year of assessment. So if the AP, okay, if AP is equal to BP, so we just take the adjusted income for that AP. AP is accounting period, okay? Just accept the adjusted income as the taxable income for that basis period. However, if AP, okay, if AP here is different from BP, means the accounting period is not similar to the basis period, like in scenario 1 and scenario 3, therefore you need to adjust the adjusted income for that accounting period to be suitable for the basis period. Okay, let's say this is 2 years. Okay, year 1, year 2. Okay, let's see situation 1 where you close the accounting period here. Okay, AP1, AP2, and then from here probably you close again here, AP3. Okay, so what you have is the adjusted income for this period, and then for this period, and then for this period, right? So in a basis period, this one is considered as BP1 for YA1, BP for YA1, and this period is BP for YA2. So meaning that you need to add the adjusted income for here and here. Adjust accordingly, okay? So you can see the example in comprehensive example C, cuci merelit Sdn Berahat on page 85, and the answer is on page 86 for further understanding. Okay, next we will see the basis period under the liquidation process. Liquidation is where the company will be winding up or bankrupt. So liquidation is due to probably voluntary basis or under court order. Okay. When it is the company is under liquidation process, the company will appoint a liquidator. So liquidator will need to provide two statements here, the liquidator accounts of receipts and payments and statements of position of winding up, and to submit these two reports to the minister every 6 months. Okay, every 6 months. So this is the requirement of the law. Need to submit every 6 months. However, in terms of paying tax, the company need to pay tax regular. 1 year only one time pay tax. Okay. Therefore, what we need to do for normal basis period for a year of assessment under liquidation should comprise of two accounts lah. Two accounts from the preparation of accounts and receipts and payments or position in the winding up by the liquidator. You can combine two statements to form the basis period. And then there may be more than one liquidator during the liquidation process. So meaning that sometimes a company need to reappoint another liquidator because the first liquidator probably have some problem with them, and then they need to stop the first liquidator and find a new one, or the first liquidator would like to withdraw themselves, and then the company need to find a new liquidator. In that case, when the new liquidator come in, probably the new liquidator will change the date preparing the statements here. So it is similar to the change of accounting date. the treatment is similar. Therefore, for the treatment of BP, you need to remember the conditions that I told you just now. No missing YA and no 2 or more basis period in a YA. Okay. So that is the important thing. You can read the rest. And you can also see example in page 15 until 10 in, sorry, example 15 to 10 in pages 77 to 80. And also you can see other situations specifically stated in the textbook on page after the example, which is under 5.0 in the textbook. Okay. So that's all I would like to share with you all this time on basis period. So thank you for listening. Thanks also to your commitment and strong study ethics. We know next chapter could be even harder than the last ones, but please stay positive and strive for excellence. Okay, moving forward and moving upward. Thank you from me, Dr. Idawati Ibrahim.